So we have about 30 minutes, a little bit about me here. So I've been around pawn shops for about 20 years now. One of the first pawn shop clients that I ever did work for was one of the first acquisitions that Cash America made when they got started up 20 some odd years ago. So I've got a lot of experience in the industry, and hopefully I'll provide you with information that is applicable to you or helpful to you. Here's my contact information also, which you guys have got. So if anybody's got a question that they don't think about when they're submitting that information to Margo and you want to email me directly or give me a call, feel free to do so. I've got some things attached to this that you may or may not find applicable. One of the main things that I find when helping anybody with their accounting system is that they've got to have a good chart of accounts set up. If you have set it up yourself, sometimes you set it up in the method that you may think is the best way to track that information, but when you try to start reconciling things because the chart of accounts has not been set up necessarily in the best manner, that makes that reconciliation difficult. So working on your chart of accounts and getting that done properly is a big plus to having your accounting system work properly for you too. And so I attached a sample of that, which you can take a look at and see if there's anything in there that would be applicable to you and help you out. There are numerous pawn shop programs out there. Most of you folks hopefully are using Bravo. And so each of these presents some different challenges in getting that information into your system. Some of you may be using the integration format, which Margo had asked me a question about. And so if that integration is not set up properly, then that's not going to post to your system correctly either. So the setup on both sides, both in your chart of accounts and in your pawn software, is going to be important to that integration working properly, or if you're going to do manual entry in order to get that information in there to get it posted to the right account. Payment methods are another issue that comes up because we take credit cards, we may take checks, we get paid with cash, we accept payments on eBay that go through PayPal. And so in reconciling those things, if we're not keeping up with the payment methods properly, we're going to have a hard time reconciling our payments at the end of the day. Properly recording of that is going to be very important to making sure that the reconciliation process works correctly. When you're recording items in your programs, everything is cash basically at the pawn shop level. Whether they paid for it with a credit card or paid for it with cash or paid for it by check, it's still cash in your register at the end of the day. So keeping up with those payment methods properly and whatever paid outs are going in and out of your drawer is going to be important in getting that to work the correct way. A lot of people have used their petty cash drawer for cash paid outs also that don't have anything to do with making a pawn loan or buying inventory. I have found that by setting up a separate method, let's see here, somebody says they can't hear. Are you getting that fixed, Margo, I guess?
I'm trying to figure it out right now. I can hear you just fine. Let me check and see. Not seeing anything on my end. Just one second. Sorry, everybody. Hey, Woody, can you check your audio thing and make sure you're seeing signal coming through? The audio
What do
tab?
you mean? The audio tab?
Uh-huh.
You know, I don't have an audio tab showing up, Margo, like I did yesterday. Is that the problem?
Okay. Let me try. I'm gonna real quickly. Sorry, everybody, for the inconvenience. Real quickly, I'm gonna send him another option to connect audio-wise, and we'll get this fixed. Woody, on the audio tab, do you see a section to request an audio pin and to call in?
Margo, I don't have anything showing. Are you talking about in the little block on the right there?
Yeah, under audio.
No, there's nothing showing up there. It just says view audio options.
Is there anything? There's nothing to click on?
No. Oh, I clicked on this. It says choose mic and speakers, which I'm not using.
There should be an option to call in as. Go ahead. Hold on,
Oh, here we go. Phone call. Okay. Oh, yeah, and I did 86 pound earlier. It says I'm connected now. Oh, now I've got a thing showing up, mic. Can everybody hear me now?
Let me see what the responses are.
You want me to click on start broadcast
Yes.
now?
All right. I think we should be good to go now.
All right.
All right. Can you guys hear everything okay now?
Oh, good. I hear a bunch of people saying yes. Terrific.
All right. Sorry about that.
Well, it's just like the Golden Globes, okay? We got off to a rough start, but everything will be fine. Somebody needs to call Mariah Carey up and tell her that Dick Hart Productions screwed me up today. So, all right. So I'll go back and start over again. Appreciate everybody joining us today. I was telling you I have a little bit of a cold, so hopefully you'll be able to understand me over this, and we won't have any problems. And I appreciate y'all giving me the opportunity to talk to you. You have my bio information here and my contact information if you need to get in touch with me. If you don't remember something to send to Margo to have her forward to me and you've got a question later on, feel free to call me or to shoot me an email. I'll be happy to respond back to you. Just a little bit of a brief history on me. I've been around pawnshop accounting for over 20 years now. One of our first clients that I ever dealt with was the first major acquisition that Cash America made a little over 20 years ago when they got started. So that chain had 18 stores. So I've seen and been around pawn shops ever since then. First key to getting your pawn shop accounting done correctly is to make sure that you've got a good chart of accounts and that the chart of accounts is set up in the proper order. I know a lot of times people set up their own chart of accounts from scratch or in a method that they think that the way that it needs to be, and in reality things get posted incorrectly because we don't have the chart of accounts set up very well. So if you haven't had somebody look at your chart of accounts in your accounting system before, that might be a good thing to take a look at to make sure that you're posting things properly, whether you're doing it through integration or whether you're doing it manually. Your data entry methods, again, are important to that because if the chart of accounts is not set up properly, then the things are not going to get entered in the proper location. We have to generate, depending on what program you're using, and I'm supposing that most of y'all are using Bravo. A lot of times you've got to generate multiple reports in order to find the information that you need. Bravo does have some recap reports which provide us with most of the information, so if we're entering that data manually, then that information is located in a central place, and you've got subsequent reports to utilize to tie out to make sure that you're posting the correct data. Tracking your payment methods is important, and making sure that you're going to be able to reconcile properly, because we get paid with multiple methods. We get paid with cash, credit card. If you've got stuff on eBay, you may have an eBay cash account with them, or you're doing all that through PayPal. So a lot of times we're accounting for that activity just by the deposit, the transfer that's coming over from our PayPal or eBay account into our bank account, and that's not really accounting for the activity that went through that account. So we've got to account for all of those things properly in order to reconcile our cash register at the end of the day. Another thing that goes on with pawn shops is a lot of us have paid outs out of our cash drawer. So in addition to the normal activity that's going on in there, where we're receiving payments, paying out money for loans, possibly purchasing inventory, we're using that to pay out other things out of our drawer. Well, a lot of times that is where part of the confusion comes into play, because we're not properly accounting for those paid outs that are coming in and out of our cash drawer. You know, for example, we pull out $20 and we send somebody down to go get lunch. Or we've got to send a guy somewhere and we give him $10 for gas money. The guy came by to clean the parking lot or wash the windows, and we pay him out of there. We've received inventory in from a third-party source, and we've paid it out of there. So we're using the cash drawer for other things than what the cash drawer really needs to be used for, which is just what's going on at the store operation. What I try to encourage folks to do is, if they're going to do it that way, is to consider setting up a separate petty cash bag in order to handle those paid outs through there. That way we're keeping people out of the drawer for other things than activity that ought to be going on through the drawer. It's really amazing what happens when we set up a separate petty cash bag, and in order to get that bag reimbursed back to what we set it up to be, and let's say it's $500, and I've got to turn in a report to you that says, here's where I spent the $500 and here's all the receipts. Well, suddenly we're not spending as much every week as we were spending before, because now I've got to account for everything a little bit better. I can't just pay it out of the drawer and say, hey, I lost the ticket. And so I've really found that that helps people in their reconciliation process, because we've kept the non-direct store activity out of the drawer and we're accounting for it somewhere else. Are we reconciling our pawn loans and inventory and layaways on a monthly basis? Let's start with inventory. So when we're doing inventory, are we accounting for our buys versus our purchase from dealers or wholesalers correctly? And what I mean by that is, depending on how you're posting everything in your accounting program and how you're posting it in your pawn software, you know, when I've got to buy from somebody, you know, I've purchased that inventory and I'm going to put it back there on my buy hold shelf until such time as I can put it on out there. Well, did I pay for that out of the drawer, or did I pay for it with a check? Because if I pay for it with a check and I've recorded it in my accounting software as a buy, and then I turn around and record it in the pawn software as a buy, and I say that's going to assume I paid for it with cash, well, then we're going to account for that thing twice. If I purchase something from a dealer, am I accounting for it in my pawn software properly? Because I don't want to record that as a buy, because the buy means that I purchased it from somebody and I've got to have a hold on it, versus buying it from a dealer or a wholesaler where I can stick it out there on my shelf automatically and have it included in my inventory right then. So the way that I account for that in my pawn software and the way that I account for it in my accounting system are crucial to getting this recorded correctly. Do I have multiple stores? If I've got multiple stores, am I accounting for transfers properly within my program? So, and that could take on some different shapes and forms. For example, Maybe I receipt everything in at one store and then I disperse it to other stores. For example, if you have guns and you don't want to have to worry about the guns getting accounted for properly at the store locations, so your initial receipt of those is to store 1, and then you're going to disperse things out to stores 2, 3, and 4. Do I count for the receipt of everything into store 1's inventory, so I've got it all recorded properly? And then do I properly record it as a transfer and reconcile those transfers between stores when I ship the guns out to other locations? And it wouldn't matter whether I'm talking about guns or TVs or whatever it is. If you've got multiple store locations, a lot of times you're going to have inventory built up at one store and you need it at another store. You've got an excess of televisions over here at store 1 and you need some TVs in store 3. So am I tracking that properly so that when I'm trying to reconcile my inventory at the end of the month, I've accounted for those transfers the right way? I've seen instances of where when I'm doing my pulls from inventory, that my pulls from inventory, pulls from pawn loans and my additions to inventory, I've got that written up backwards right there, are not the same thing. So if I took it out of pawn loans and said these are my pulls today, and it said it was $1,000, how did I only end up with $900 going into inventory? We've got to account for that difference. Did I not, record it the right way? What happened to cause that difference? Did I fat finger something? What went on so that those two numbers were not the same? Those two numbers ought to be the same every time after I make that transaction within my system, because it ought to just be a system transaction. Taking it out of pawn loans, I'm putting it in inventory. Do I have police confiscations? Have I handled those correctly coming out of inventory? Do I have a separate account to track for them? How is it I'm tracking those police confiscations? And what was the ultimate disposition of that? Did I end up getting it back? And so in that case, did I put it back into inventory the correct way so that it offset the relieving of inventory when I took it out of there to begin with? Bulk adjustments. A lot of times you'll purchase, somebody will come in and sell you 1,000 CDs or records, or, gosh, I had somebody that bought sunglasses one time, bought a truckload of sunglasses. How are we handling those things in our system? Are we putting those things in there in a bulk item holding account and then going back in and adjusting that as the cost gets down in that account, or how are we handling those things? So on the adjustments, I want to go back to guns for just a minute because it's a good example if you've got guns within your store. You've got the gun registration that you want to charge somebody for. And so you're charging them whatever the fee is to do the gun registration and keep up with all the paperwork. A lot of times people want to put a cost in their system because they say, well, I've got time involved in that inventory item, and so therefore they put a cost in there. So the problem is that when you ring up the sale to record the fee for that license and you've attached a cost to it of $10, let's say, the system's going to relieve inventory for $10. The problem is you never had $10 worth of cost in the inventory to begin with. You have cost in your time, your employee's time. That cost has already been recorded with the payroll. You have cost because you have to pay for the forms in order to track all this stuff. You've already got that cost recorded because when you bought the forms, you paid for it there. So you don't really have a cost in your inventory system that goes with that associated sale. That cost is already in your general and administrative expenses that you've already got recorded. So we don't want to put a cost in there for something that we've never entered, that we don't really have a cost for. We never really paid for that inventory item, which was the permit that you're keeping all your records and everything for. So there's some other things like that. Like I said, you buy stuff in bulk. Tools, for example, which would be another good one. Some guy comes in and he brings in a tool chest and puts it in pawn, and you take it out of pawn and goes into inventory because he never came and picked it up. And so you gave him a pawn loan for $100 on that tool chest. Well, the tool chest comes out. There's also $100 worth of tools in the tool chest. Well, you don't really have a lot of cost in the tools. The cost is in the tool chest, and you're going to put the tool chest out there on the floor, and your cost in the tool chest is going to be $100. Well, this is another example of where you might have a bulk adjustment. You may have a tools account, and you'll say, okay, I'm going to load all these tools in there, and I'm going to put $50 in there, but when that gets down to zero, I'm going to go back and put some more cost in there. We want to do that through the bulk adjustment, not doing it through the original purchase, because we didn't pay anything for those tools. Inventory write-downs at year-end. Years ago, what we used to do is we would go through the inventory aging at the end of the day, or at year-end, and we go through and we would write down individual items in our inventory, because we'd say, gosh, that CD player's been sitting on the shelf over there for 6 months and I haven't sold it yet, and I pawned it for $10, and I've had it out there for sale for $15 and I still haven't sold it. Well, instead of going in and writing everything down specifically within your system, what you could do is an inventory valuation account. So what we do is we set up an inventory valuation account, and it's an allowance for inventory write-down, and we go ahead and record the write-down on the inventory at year-end based on those items that we feel like are older items, and we're not going to sell them for what we originally gave out that pawn loan for. What I try to do on something like that is take the inventory aging report at year-end, look at everything that's over 180 days old, not counting guns and jewelry, and make our allowance based on what the remaining value of the inventory is at that point in time. You can do it by specific categories. There's a lot of different ways to do that and come up with it, but that saves you time and effort of going into your system and doing on a per item basis right there. I was trying to see, there's a question here.
Yeah, there was a question about what falls under, would something fall under service fees? I wasn't exactly sure what Matt was referencing to there, but he was wondering what falls under service fees, or would that fall under service fees?
It might have been discussing about the, like the license fee for guns.
Yeah, in reference to the gun transfer section, he said.
Right, right. So I guess you could set it up as a service fee, and just handle it that way. That would certainly be one way to handle it. A lot of people like to load an inventory item into their system called the gun transfer fee, so that when their employees are ringing it up, they know what to go hit. And so when they do it that way and they try to attach a cost to it, is where it causes an issue. You could load it in as a service fee. I don't know if that would let you adequately track how many transfer fees you had at the end of the year, because if you've got other service fees you're charging for some reason, those things are all going to be commingled in there together, called service fees. Pawn loans and inventory are kind of the same animal, right? We start out with pawns at the beginning of the year. We've got pawns that we added this month. We've got pawns that were paid down. We've got pulls that went to inventory. We've got police confiscations, and we've got adjustments. If we're not tracking each one of those things separately, sometimes it's hard for us to go back and reconcile that account at the end of the day and figure out why that doesn't reconcile in our accounting program. It reconciles fine over here, but or we think it reconciles fine over in our pawn software, but when we don't track those items individually in our accounting software, sometimes it makes it hard to reconcile that when we find a difference between what our accounting software says and what our pawn software says. That's one of the reasons in my chart of accounts that I try to set each one of these things up differently and have a separate account for it. Now, one of the things that Bravo does, if you're doing the integration, is it lumps all that stuff into one account for you, which creates a little bit of a reconciliation problem versus manually posting that at month end and being able to utilize separate accounts to track those things. Layaways, again, kind of the same way. Are we tracking the amount separately in layaways? I know some people don't keep up with the layaways specifically in their accounting program, but if I've got a lot of layaways on hand and I'm not tracking those separately, then I'm not going to be able to reconcile my cash account and my accounting program at the end of the day. And that's really what a lot of this ties back to is, can I reconcile my cash and register at day end? in my accounting program compared to what my books say. And so if I don't track these things and record them properly, then I'm not going to be able to do that. Store audits. So I'm talking to somebody the other day, and I asked them, when was the last time they did a store audit? And he told me last December. And I said, what are you doing internally to make sure that you don't have employee theft going on? He said, well, I'm counting my guns, which we know we're getting a lot of trouble if we don't keep up with our guns. So that's always a big issue if we've got guns, is to make sure that we're doing that. And he said, I'm auditing my jewelry cases. I said, well, how often are you auditing your back room? Well, I haven't done it since last December. I said, and how often are you going in and auditing your pawn loans? And he said, well, I'm not doing those on a regular basis either. And I'll tell you, if you're not doing those on a regular basis, that's an open door for your employees who want to take advantage of you to be able to do that. I recommend to any of my clients that are in the pawn shop business that they need to be doing regular audits that everybody knows about, and I'll use guns and jewelry as an example. You know, we get in a lot of trouble if something's wrong with our guns. So guns ought to be being done on a monthly basis, no doubt about it. Does everything tie out on my guns? What I've got for sale and what I've got in pawn in the back room. Jewelry, because it's real easy for somebody to walk off with a chain, is something that we ought to be doing on a regular basis so they know it's being done, but also on an irregular basis. And that accounts for everything else. And so I suggest to people that they come into their store tomorrow and they say, we're going to audit this row right here. We're going to audit this jewelry case. We're going to audit this row of electronics. Whatever it is, and we come in and we do it. And then we go back to the safe and we pull out a couple of drawers and we say, we're going to audit this first row in this drawer right here, back here in my pawn safe. And we're going to make sure that everything that's what it says it is what it is. That includes if you're using a scan gun, does the description come up the same? Did I open the envelope and look inside of it and see that it is what it says it is? If you're taking pictures of your item, did I compare it to the picture also? So that the picture that I took that says this is what this item is when I pawned it and what's in the envelope back here or what's on the shelf agree with each other. A lot of times people go in, especially if they're using scan guns, and they'll scan it and they'll look at the inventory report and it'll say, yep, that's what it is. But they don't go back further to check and say, gosh, is this something that came out of pawn? And is this item what it was originally when I started off with this? Or is this what it was when I bought it and put it into the system? So they're only partially doing the audit step when they're doing that because they're not going back to the original source document to see that it says what it is. So part of the audit step has got to be going back to do some of that work too. Not saying you need to do it on every item, but you need to pick some items and go back to the beginning and make sure that whether it came from pawns originally or it came from an inventory purchase originally, that what it says it is and what I've got out here are still the same thing, and for the amount that it's supposed to be. Somebody could have done a ghost loan and sold something, said they pawned something for a certain amount, now they go in and fix it. By the time it gets to your shelf, what they said they loaned $200 on looks like something that they loaned $10 on. So by going back to check on that from the origination all the way to the end, that helps us figure out, is what it is or is it not what it is? Multiple store locations. Are we tracking things by store within our accounting system? Because if you want to go back and be able to really truly see what a store's doing, I've got to track those revenues and those costs by store and able to figure that out. So do you have your accounting program set up where you can do that? Are you tracking your general and administrative expenses by location also? Do I have all the employees in the right location so I'm tracking their payroll that way? Am I keeping up with my utilities by location, my phones by location? Am I tracking all those things by location so I really and truly know what that store is doing versus what I'm doing overall? Here's an example of a chart of accounts which y'all can look at, and hopefully that will be some help to you. Sample financial statements. This is for a multi-store location. Now, what I did here is we have administrative expenses because there's things that are not applicable directly to a store. So, for example, I may have bank service fees that are not applicable, to a store, because if I've only got one PayPal account, I've got those PayPal charges. Do I want to spend time going back and allocating those to particular stores, or do I just want to throw them into bank service charges and put them under an admin column? Contributions, they may be applicable to a store, they may not be applicable to a store. So I may put them in admin and allocate them to the store at the end of the year. Conventions and seminars is another good example. Insurance. There's a lot of things that are not applicable directly to a store, and so when I'm looking at what the store's doing, do I have administrative costs that I just want to put in an admin column versus trying to divide them up to multiple stores all year long? That way I've got a really true picture of what the store's doing versus what my overhead costs are that are not applicable to the store. Salaries and wages is another good example. And so as owners, especially if you've got multi-store locations, I'm going from store to store to store to store. And I might have a manager also that's doing that for me. And if I've got multiple locations, he's not just at one store all the time. So that's another great area that you can use an administrative column to track things by versus charging it directly to the store to get a good idea of what's going on at the store level. I know we're trying to hold this down to about 30 minutes, and I think we've been in this about, counting our shortfall, I think we've been in here about 25 minutes now. I'm going to look at a couple of Bravo reports for you real quick, and then if we've got any questions, we've got a second to answer those and see if anybody needs anything, and in particular that I haven't covered for you that you'd like to ask a question about for the group on the phone. So these are reports that I print out of Bravo each month at month end because for the few clients that I've got that are doing Bravo, we're posting things manually. We're not using the integration. So I print out the end of the month report, the loan-based report, the inventory-based report, the layaway deposits and balance report, the sales accounting report, the pawn activity summary report, and the deposits and paid out spreadsheet. That way I've got all of the reports with all of the monthly activity on it, the totals for all the monthly activity on it. If I want to see the detail, we can either go back in the system or go back and look at the report for that day to see the detail for what went on. So this is the end of the month report right here, and it has our payments on our loans, our interest and fees on the loans, new loans that we made, our buys, tells us what our taxable sales is, what our sales tax is, what our non-taxable sales are, the layaway payments less the sales tax. It's got the cost of goods sold. This is a credit column, is a store credit column. Should be my net of my cash in and then my deposits and paid out. So I've got all of this information right here on this report, and it tells me also what my total cash on hand ought to be at the end of the month. Hopefully my cash on hand ties back out to what my reconciliation is on my accounting program, as well as what my report says right here. Now, one of the things that can affect the cash on hand is if you are keeping a separate cash account of the cash in your safe versus tracking it in the program, because then that cash is going to get counted as cash on hand in my accounting system and not showing up as cash on hand on the report right here. So that can cause a little bit of a reconciliation difference right there.
We have a question from Rob Strenta. He asked if why you don't use the integration with Bravo.
So there's a couple of things with the integration with Bravo. One of the things I found is that because the way the integration with Bravo currently works is you have to post that on a daily basis. And so therefore, you've got a lot of data in your accounting program now that you don't really need over there because you've got it in the pawn software system. So if you want to look at something particular, it's real easy to go back over here and look at it. Now, I've got some people that are using it. I just don't think we need personally, I don't think we need all that data in our accounting program. So therefore, that's why on some of the folks I've got that are using Bravo, we're just posting manually at month-end summary totals. One of the problems with QuickBooks and Peachtree both, which is probably something that most of y'all are using, is that once once our file gets to a certain point, we've got to do something in order to condense that data that's in the file. And so that means we've either got to start at the new file or condense the data in the old file, and when we do that, we can't go back and see the detail, so why post the detail to begin with? So I've kind of numbered some things on here, but what happens is each one of these other reports that I've talked about, you can go see that they tie back to this. So this is the inventory base right here, and it says the ending inventory, and this is just for the month of December. So we started with the beginning. Here's our buys. These are our pulls right here, some returns that we got, vendor purchases. So this is where it's important to record it as a vendor purchase versus a buy if we bought it from a vendor, a wholesaler, you know, somebody like that. And then here's our cost of sales and our reactivated loans, which means that we put it back in we pulled it to inventory, but it got reactivated, we put it back to loans. So it says that our loan total, our inventory total at the end of the month ought to be $91,000. And I come over to my inventory base report, and I come down here and I look and I see that I've got that same number here and I've got that same number here. So I always like to run all of these reports at month end to see that everything ties out, because it should. Sometimes there's a discrepancy. If there's a discrepancy, I want to know why. I want to go back and find out what's going on. That's why I encourage people to run these reports at each month end, so they've got all this data somewhere else other than, especially if you're using the integration, other than just having it post. I want to be able to take these reports and tie back to the accounting system. So if you look at each one of these, it's got totals on it at the end of the month, layaway deposits, and we can go back and we can find all of those things on our accounting summary report, okay, right here. All of this ties back to reconciling of cash at the end of the day, guys, because everything you take in is cash and register. And the biggest problem we have as accountants is reconciling cash and register at month end. Does it reconcile once we post all the ins and outs of what went on with pawn loans and inventory, layaways and paid outs, transfer, deposits to the bank, cash we pulled from the bank to put in our register? Does all that tie out at the end of the month? And so if we don't reconcile this stuff every month, then at the end of the year, when you come to me and say, hey, my books are ready for you to do your tax return and I can't reconcile your cash account, that's what creates the biggest problem.
We have another question from Matt here. He asks, if we are using a CPA for most of our accounting, the monthly printout that you are speaking of should be sufficient?
That should be sufficient. Providing that with that information, they should be able to make the postings to your general ledger off of these month-end reports. If they understand the pawn system and how it works, this should be what they need.
Where is the petty cash reconciled on this report?
It's not reconciled on this report. Hang on just a minute. So this is the paid outs report. So if you're doing paid outs through the drawer and you want to continue to do them through the drawer instead of doing them separately, they're going to show up here. I think these are stock items that are set up in their system automatically. So if you've got other paid outs that you want to track separately, you're going to have to add those items and make sure they get recorded in this pawn software correctly. And then Rachel's got a question. You have multiple stores under one account but use separate QuickBooks. So there's no need to use separate QuickBooks. In QuickBooks, you could set up classes. And I don't know about doing the import. You'd have to ask technical support about that, if there's a way to import it and make it post to separate classes. But if there's not, that would be a reason to do it manually so that you can keep all your data in one QuickBooks file instead of having to combine it at year end, which is what you're having to do now, or month end to do financial statements. and that way you won't have an issue with it posting to one account, one sales account, instead of being broken out by store location. Steve, I don't know the answer to that on the petty cash drawer. What I currently have some people doing is they're just tracking that separately. They have a petty cash bag. They accumulate their cash tickets in there, and then when they're down to nothing, they submit an expense report. It totals up to what all the cash tickets total up to, and they get a new check written, and they replenish their petty cash bag.
Steve asked, do you do any special accounting entries for scrap gold?
So, Steve, everybody handles scrap gold differently. What I really try to recommend to folks to do is that when they're scrapping, that they if they're not doing it monthly, but they're pulling items out monthly to put into scrap, that they create a separate inventory account and track those items through there, and then when they sell the scrap, that they record the sale and the payment of the scrap in the same month that it occurs. So if it's today and you send it off today, you're going to get your check back before the end of the month. All that transaction is going to happen within the month of January. But if you scrap it on January the 29th and send it off, and you don't get the payment back until February the 3rd, wait till February the 3rd to record that transaction, so that the cost of goods sales, the relieving of inventory, and the sale all show up at the same time period.